Welcome back to Financial Market Insights for Traders. I'm your host, Sophia. And today we're tackling a topic that's as much about geopolitics as it is about global market risk. Can Europe defend Ukraine without the United States? And what does that mean for financial markets around the world? Because let's be clear, what's happening on the battlefield in Ukraine isn't just about tanks and trenches. It's about currencies, commodities, investor sentiment, and the fragile threads that tie global economies together. This isn't just a European security issue. This is a trading risk, a volatility trigger, and potentially the start of a new era in international finance. So let's get into it. It's March 2025, and President Donald Trump is back in the White House. One of his first major foreign policy moves? A full suspension of U.S. military aid and intelligence sharing with Ukraine. No more HIMARS. No more Patriot missile systems. No more classified battlefield data flowing from Langley to Kiev. The announcement wasn't just a shift in tone, it was a seismic crack in the Western alliance. And it hit like a thunderclap across Europe. In a press conference that reverberated through NATO corridors, President Trump said plainly, Europe must take care of its own backyard. The American people are no longer footing the bill for European security. Cue panic in Brussels, Berlin, Paris, and perhaps most acutely, in Kiev. Let's talk facts. Since 2022, the U.S. has contributed over $46 billion in military aid to Ukraine. We're talking artillery, missile systems, cyber defense tools, and most critically, intelligence. And now all of that is gone. Almost immediately, French President Emmanuel Macron took to the airwaves calling for Europe to assume strategic autonomy. German Chancellor Olaf Scholz echoed the urgency. This wasn't just about Ukraine anymore. It was about Europe's capacity to defend itself without Washington's safety net. The stakes? Nothing short of continental security. But here's the problem. While the rhetoric is strong, Europe's military machine hasn't been built for speed. And replacing the scale of U.S. support? That's a heavy lift. So what has Europe done so far? First, defense budgets across the bloc are soaring. The European Commission has proposed an unprecedented 800 billion euros in defense mobilization funds. That includes 150 billion euros in loans earmarked specifically for joint arms procurement. Countries like Poland are going even further, now spending 4% of their GDP on defense. Latvia has reintroduced military conscription. Germany, long criticized for underinvesting in its military, is exploring a return to mandatory service. And then there's Operation Sky Shield, a joint European air defense initiative. The plan? Deploy over 120 fighter jets from the UK, France, and Germany to patrol and protect Ukrainian airspace. Complement that with IRIS-T and SAM/T air defense systems, and you've got the early blueprint of a European-led NATO light. But let's be honest, the logistics of that plan are a nightmare. Coordinating dozens of air forces across fragmented command structures is complex on a good day. Doing it in wartime? That's another level. Beyond hardware, there's another huge gap: intelligence. American satellite systems, surveillance aircraft, and SIGINT capabilities were critical in giving Ukraine the edge in counteroffensives. Europe has intelligence assets, yes, but nothing on the scale of what the U.S. had been providing. Right now, Europe is trying to stitch together its own intelligence sharing network. There's even talk of forming a European intelligence alliance, something that sounds a lot like a European version of Five Eyes, but this will take time. And Ukraine doesn't have time. All of this raises the central question again. Can Europe really take on this burden alone? Now let's talk markets, because this is Financial Market Insights for Traders, after all. The moment the U.S. announced the withdrawal of support, energy markets jumped. Brent crude rallied 6% in a day. Natural gas prices spiked across Europe. Why? Because any escalation in the war threatens supply chains and infrastructure, especially those near key gas routes and refineries. Defense stocks? Through the roof. BAE Systems, Rheinmetall, Dassault Aviation, all posting double-digit gains as investors anticipate a massive ramp-up in European arms spending. But that's not the whole picture. The euro has started to wobble. Investors are nervous about what increased defense spending, especially without U.S. backing, means for European debt and deficits. And if political unity within the EU fractures over the cost of this war, that volatility will only increase. Meanwhile, safe havens are surging. Gold has hit a new 12-month high. The Swiss franc and U.S. treasuries are seeing renewed demand from institutions looking to hedge against geopolitical instability. The bottom line? Traders need to be paying attention. Here's what we're watching right now. European defense sector, expect long-term tailwinds. Governments are placing massive arms orders. If you're trading equities, defense contractors are hot. Energy commodities, any perceived threat to supply lines in Eastern Europe or escalated strikes near infrastructure will drive volatility. Watch Brent crude, natural gas futures, and related ETFs. Currency markets, the euro to US dollar pair is sensitive right now. Any signs of EU division or inflation tied to defense spending could push the euro lower. Safe havens, keep an eye on gold and the Swiss franc. These will spike with every Russian advance or political disagreement inside NATO. Bond yields, watch German bunds and French OATs. Rising deficits for defense could impact sovereign debt markets if fiscal hawks start pushing back. And as always, stay sharp around key geopolitical headlines. Markets are hypersensitive to headlines involving NATO, Russian troop movements, or European defense votes. So where does this all go? The U.S. stepping back from Ukraine is more than a policy change. It's a geopolitical inflection point. Europe is being forced into a leadership role, one it has long resisted. And markets are reacting to this uncertainty in real time. Can Europe defend Ukraine without the U.S.? Maybe, but it won't be cheap and it won't be quick. The coming months will test Europe's unity, resilience, and ability to rapidly build military capacity under fire. For traders, this is a time of opportunity, but also caution. Volatility will be the name of the game, and geopolitical risk is now a permanent feature of market analysis. Stay tuned, stay informed, and trade smart. For deeper insights, strategy breakdowns, and live geopolitical market analysis, head over to crystalballmarkets.com and check out the blog. We've got charts, breakdowns, and real-time commentary to help you stay ahead of every twist in this unfolding crisis. Until next time, I'm Sophia, and this is Financial Market Insights for Traders.